In this video, guys, I'm going to look at what makes a great FX trader. Stay tuned. Hey guys, warm welcome to you. All right, so what makes a great FX trader? What makes a great trader? A full stop, regardless of the market they're trading. Some of the things that I've noticed from great traders, some of the things I've noticed from traders who I've spoken to who are struggling or not doing so well. That doesn't mean necessarily just because you have these bad habits you can't change them, but definitely if you see the attributes, there's a commonality, there's a theme among successful traders, it makes sense to try to emulate as much as you can some of those attributes. So let's go and have a look at some of them. So the first thing is a structured approach. There's no profitable trader out there who has a shotgun approach. Every single trader who is doing well, whatever level that may be, has an approach that's structured. They know what they're looking for, they know what they're looking at, they know the markets they're trading. It's all planned out for them. Now, we're not talking about a rigid trade, not necessarily talking about an algorithmic type strategy, but it's structured. Many traders who are struggling are just shooting from the hip and just spraying a shotgun at things and hoping they hit something. The other thing is good risk management. Many good traders, all good traders, know how to manage risk. They don't all use it the same. Some traders I know don't use stops. They trade a smaller size and scale up and scale down. It works for them. Some traders have a stop loss in place. Some traders use a hedging strategy. However it is, they've all got good solid risk management. They trade a position size that they know may well be varied on good trades. They know when to scale back, they know how much they're going to risk, they know their numbers. Whereas bad traders or poor traders tend to vary their position size, which isn't in itself a problem, but without any plan. So when they think the trade's good, they go in bigger. When they think the trade's not so good, they go in smaller, and there's no structure to it. Again, same kind of thing of structure. Third thing is self-awareness. Good traders, super self-aware, confident, not cocky, understand that they are emotional, they're humans, not trying to stifle emotions, just recognizing that they come up every time now and then. Losing traders generally get angry and really get angry, get frustrated, they get elated easily. And that is not a problem, but it's how you let that manage your trading after that's the issue. If you're trading out of anger, you're never going to win. If you're trading out of greed, you're never going to win. So whilst winning traders still experience these to a certain degree, they're not quite as elevated because of the experience level, and they get a bit more immune to these kind of things that really annoy a newer trader or losing trader. But they know how to manage it, and they know how it influences their trading. So even if they do get super angry about something, they just know from experience, you know what, it's just not a good time for me to trade. Let me just wait until this anger subsides and carry on. So they don't do any damage to their account that a losing trader would do. More and more damage, digging a big hole out of frustration, anger. It gets worse and worse and worse. It's like a big vortex. Always learning. Good traders always looking to see what other traders are doing. They may not implement it, and most of the time they won't. You know, they're not going to say, hey, I'm going to copy your strategy, but they might hear something different about a way somebody approaches the market or something that interests them. They're always open-minded. You know, bad traders think they know it all, they think they've got it down, and they're just kind of so focused, which isn't a bad thing in itself. Being focused on one thing, but being open-minded and saying, listen, I'm open-minded, I'm focused on this one strategy or one thing for now, however I'll explore that later. So we're not saying that you need to just kind of take all this information in and get bombarded and get confused. No, be focused, but still be open-minded to learning and improvement, because the biggest thing is, even if you go from a losing trader to a profitable trader, that strategy that's got you there may stop working, and you have to find a new strategy. It's quite common, you know, you go to a profitable trader, it's working well, making more. All of a sudden the strategy stops working, and it's the first time it's happened to you, like, now what do I do? So always learning, always looking for new ways of approaching the market. A solid understanding of your edge. You can't really explain your edge if you're a losing trader. You don't really understand what your edge is, whereas you know as a winning trader, hey, or a good trader, well, my edge is this. I'm very good at doing this. This is why I trade better than others. And recognizing that that's what they focus on, and they're not trying to compete in an arena where other people are. They're not trying to trade other things. They recognize their edge and then just double down on it. Quick to scale back when performing poorly. This is a big one. You know, a lot of traders who are struggling will trade more size in drawdown because they want to get back to where they were quickly. Whereas better traders or good traders will recognize they're trading poorly and scale back, because it's not necessarily the damage you do on the initial drawdown that's the issue. That's the same. But it's what happens after that that's key. And if losing traders or poor traders are going in more heavy when they're not in control of things, then that drawdown becomes very significant. But if you're scaling back and saying, hey, I'm not quite on the ball here, something's not quite right, all of a sudden that drawdown becomes less, far less time to get back to where you were, much less chance of blowing up your account. Knowing when to press is a big one as well. You know, the best traders out there know when to really push the throttle down and say, you know what, this is worth putting a lot of risk on this trade. This deal looks good. It's lining up. It's part of my plan. It's grade A quality. I'm prepared to risk X months worth of gains or whatever it may be. Whereas losing traders will make a couple of good trades and then just be rejoicing and kind of running around saying, oh, they're a great trader, rather than recognizing actually your edge is at its maximum now. You need to press as much as you can because you don't know how often this is going to continue. You don't know when the good days are going to stop and it's going to be much more stagnant, or stuff isn't going to work as well. So it's recognizing the opportunity and getting as much out of it as you possibly can. And the final thing here, guys, is that many good traders, if not all, have a very distinct view of the markets that's different. They look at the markets in a different manner, and it varies from person to person, but some people may approach it as a pure auction theory approach or a price action thing. Some people may approach it as, very technical or very intimate in terms of like 2 or 3 day cycles or monthly cycles or earnings to earnings. They very much have a different way, perhaps, than just looking at a fundamental chart. Not a fundamental chart, but just looking at a chart in its raw format, should I say. So have a think about that. Have a think about some of these things, and also have a think about how you look at the market. How can you have a look at the market and perceive it in a unique way that's different to every other trader out there? And maybe start to emulate some of these good things from traders. And if you're doing these, it's not an issue, because we all go through phases where, this is, especially if we're beginning traders, this is kind of the norm. This is absolutely normal. But if we can recognize that this is probably not in our best interest, probably not going to serve us as traders, we can start to eliminate them and start to put more of these into our trading habits. Take care, guys, whatever you're doing, and keep your risk managed. Goodbye.